This is your LMAX Exchange technical update for Tuesday, May 23rd, 2017. Euro dollar. So the euro continues to extend its run in 2017 to fresh highs, with the market now focused on a next key objective, which comes in by the August 2016 peak at 113.67. The market has already met its short-term measured move extensions at the 112 to 112.40 area, and so that 113.67 high from August of 2016 is the next key level to watch above. It's worth noting that daily studies are into overbought territory, so we could soon see a short-term pullback, but again, the risk is still tilted to the top side, with any dips expected to be very well supported, and only a breakdown ultimately back below 108.40 to negate the current constructive outlook. In the interim, on a very short-term basis, key support comes in around 110.76, the low from the 18th of May. Sterling dollar. So cable has been consolidating above that previous breakout point, that resistance that had defined the market range top for so many weeks, as it had consolidated off the plus 30-year low from October of 2016 at 118.40. The breakout now exposes a move over the coming days and weeks up towards 135, and any setbacks now should be very well supported, ideally in the 125 area, in favor of that continuation towards that 135 objective. If we do see pullbacks, again, they're expected to be supported in the 125 area, with only a break back down below 123.60, the low that we'd seen on the 10th of April, to compromise the newly adopted constructive outlook for sterling dollar. Dollar yen. So although dollar yen has been consolidating, has bounced off recent lows, the market is pressured back to the downside since stalling out ahead of 115 at 114.37 several days back, and this does put the focus on a potential retest of that 2017 low that was seen on the 17th of April, just ahead of 108. At this point, look for rallies to be well capped, with only a pushback above 114.37 to compromise the current bearish outlook. Euro Swiss. So Euro Swiss has been bid up over the past several days, with the market now trading up towards 110, but on the first attempt stalling ahead of that psychological barrier. Rallies should prove to be difficult to establish above that 110 barrier, but a break above would suggest a more significant bullish structural shift. At the same time, a drop back below recent support in the 108.65 area would strengthen the bearish case and accelerate declines. Aussie dollar. So Aussie is overall showing signs of topping out, and so this latest rally that we've seen is viewed as corrective, with the market ideally seen well capped above some critical resistance at 76.11, the high that we saw back on the 17th of April, in favor of a lower top and continuation of downside pressure towards eventually that 71.60 medium-term support that comes in from December of 2016. Dollar CAD. So dollar CAD is in the process of correcting out from recent 2017 highs just shy of 138, but these setbacks could still extend a little bit more, with the market potentially trading into some rising trendline support around the 134 area, from where a fresh higher low is sought out, and continuation of that next upside extension beyond 137.94 and towards the 138 area, for the 140 area further up. Kiwi dollar. So the New Zealand dollar has been well supported off its recent 2017 low, though any rallies from here should be very well capped, ideally below 70.90, the recent high that we saw on the 21st of March, with only a break back below that level to take the immediate pressure off the downside. SPX 500. The S&P 500 has done a very good job being once again very well supported on dips, with the market unwilling to break down just yet and still poised for the potential fresh upside extension to record highs towards a next measured move, which comes in ahead of 2,500 in the 24.80 area. At this point, it would continue to see and need to see a break back below that low that was put in on the 27th of March at 23.22 to force a meaningful shift in the structure and put the pressure on the downside. Gold. So gold continues to put in this series of higher lows and higher highs since basing out in 2016. A fresh higher low is now sought out by the recent low that we saw in the 12.15 area, and this will be confirmed on a break above the recent 2017 high at 12.96, which will expose a measured move towards the retest of the 2016 peak at 13.75 further up. Only back below this recent low that we saw in the 12.15 area would compromise the current constructive outlook for gold.